Joining us in studio to share his analysis on the day's market performance is Jordan Toy from Legacy Family Wealth. Jordan, thanks so much for your time this afternoon. Now, in a plot twist, U.S. Federal Court has blocked Trump's reciprocal tariffs. The ruling stated that the Trump administration has about 10 days to withdraw the duties. The administration, of course, appealing the move. So I guess it really is a wait and see game. But this did not stop, sentiment from improving on the back of the move. I guess just providing some comfort for equity markets.
Yes, certainly. So from my perspective, I mean, we've seen US futures up strongly this morning. I think it just removes some of that overhang from markets. But the story is far from over, right? You mentioned that he's appealed it. Trump isn't going to let this go. So, this could potentially make its way all the way to the Supreme Court, which has its own set of considerations. I mean, we know that some of the Supreme Court justices were appointed by Trump in his previous administration, and one could argue that some are more conservative leaning on that Supreme Court. So we'll see what happens there. But, I think in the short term, yes, the removal of sort of an overhang over markets, but I don't think this is going away. We know that Trump has used tariffs as one of his main policy tools. I mean, he's signed more executive orders in his first 100 days in office than I think any president in US history. So, the court's attempting to take away sort of one of these main policy tools, or the stick that he's using to sort of brandish across the globe. I don't think he's going to take that lightly. So we'll see where this goes in the long term, but I don't think it's gone away at all. But pleasing to see in the short term some positive market moves.
So do you think we should approach markets with some caution still?
100%. I don't think this is going away. He's going to fight this tooth and nail. We've seen the administration has immediately appealed that. So, and he's talked about, we've seen the reciprocal tariffs, but, the steel and aluminum tariffs, those are still in place. He's talked about automakers. We know that the pharmaceutical sort of sector he's talked about. So there's lots more still to come here. I expect that as time goes on, there will be more and more legal challenges, because he is trying to circumvent a lot of these processes, right? So earlier it mentioned there that he's basically attempting to bypass Congress. So I think it was one of the previous U.S. administrations some time ago, that power was removed from the president to be able to just sort of impose broad, wide sweeping tariffs. So what he's done is basically said this is an economic emergency, and therefore sort of found a workaround. So I don't think that's going to stop, right? These courts and whatever sort of rulings sort of move against him, he's going to continue to try and find workarounds and simultaneously push back against those court rulings. So in the short term, yes, we're seeing positive moves in futures this morning, but I don't expect that tariffs are suddenly just gone forever kind of thing.
Another important thing to note was NVIDIA's numbers. We were waiting for those numbers that came out when markets closed. While earnings came in upbeat, most investors wanted to hear from the company's CEO around, those export restrictions and how that will weigh on future earnings growth and revenue growth. Now, it said that it could possibly take an $8 billion hit, but it still expects growth in overall revenue coming in, or rather pegging it in at $45 billion in the second quarter. Just your reading of those numbers?
So it's quite nice to see yet again NVIDIA surprising the market to the upside. So strongly up, I believe when I was looking earlier today, sort of 6% up in the pre-market or aftermarket for the US, I suppose. So pleasing numbers from them. You can almost feel the frustration from the CEO, Jensen Huang. He spoke to a number of media houses yesterday, and he's trying to walk a very fine line, right? He's obviously frustrated with sort of the moves from the US administration. But I think he's also very aware that to get into sort of a full-blown conflict with the US administration is going to be very, very bad for business. So, in one breath, we're hearing him criticize these sort of restrictions and then also sort of praising Trump in the next breath. So that's worth mentioning. You talked about the inventory write-downs, right? So they built not a brand new chip, but they modified some of their existing products specifically to comply with the Biden era restrictions around what they could sell into China. So they built this entire or almost new product, built up a significant amount of inventory, and I think the main frustration is the US administration or the Trump administration has given them very little notice. So they're basically stuck with this inventory they can't sell now. And it's not just the cost of that inventory, but it's also the lost sales revenue, the margin over and above that's also been hit. So I saw that they mentioned, gross margins were at 61%, which is obviously a very strong number, but they could have been 71% had they been able to sell these products into China. And the CEO has been very adamant that his view is that this is not prohibiting China from sort of catching up in the AI race. His sort of view is we would rather that the 50% of AI developers, according to the NVIDIA CEO, sit in China, and they would rather have those AI developers working on their platforms and US-based platforms than the inevitable route that they may end up going, say, using Huawei products or locally made products. So he's very much stating that this is not really going to slow the Chinese sort of AI development down. Obviously, he would say that as the CEO of NVIDIA, but there's got to be some truth in what he's saying. And as a NVIDIA shareholder, it is quite frustrating to see sort of politics sort of affecting the company's sales. So, but all in all, still, despite all of that, a pleasing set of numbers out of NVIDIA.
All right, let's bring it back home. It's D-Day for the SARB, and they'll be making that interest rates announcement or decision today at around 3 p.m. Now, the repo rate at 7.5%. Prime rate at 11%. These are really high numbers, Jordan. And when we look at, the inflation print that recently came out, we are sitting below the 3 to 6% target range at around 2.8%. Surely this gives the SARB some wiggle room to adjust interest rates.
Certainly, and I think we've seen that commentary sort of across the board from various big financial institutions, economists. Sort of, there is a consensus, I believe, at least in the private sector, that there is plenty of room to cut interest rates. And arguably, sort of the last 2 or 3 meetings, there was already room to cut interest rates. Obviously, our Reserve Bank considers what the US Federal Reserve is doing. We have to protect the currency. But I think a lot of the risks to that in terms of importing inflation through the oil price, we know that the oil price is sort of decreased quite significantly. So a number of those risks have abated over time and gives us even more room to consider an interest rate cut. The flip side of that is, the Reserve Bank is doing a great job of achieving their mandate, which is solely to achieve price stability. But sort of the cost to that is slower economic growth. And with a nation as indebted as South Africa is, both sort of from a consumer perspective as well as a sovereign perspective, even a 25 basis point rate cut can make a significant difference on the whole. Obviously, 0.25% on its own doesn't sound like much, but I definitely think there's room to do so. We'll see what they decide at the meeting later. I mean, we've talked about it before. I don't know if it's going to be a unanimous decision that we see later today, but I am hopeful and optimistic that we see a rate cut coming through this afternoon.
All right, let's hit pause on the conversation before we move on to your stock pick. Let's take a moment to touch on some counters that have been attracting interest from your industry peers.
Yes, so we had results yesterday from Pepkor that were absolutely fantastic, and it showed real intent from management in terms of what the strategy is going forward. You had excellent top-line growth in Pep and in Ackermans, as well as the other kind of smaller businesses in that stable, and it really was driven by the introduction of credit internally from their fintech business, where they have all the data management and all the information available to do so responsibly. Credit penetration in the likes of Pep and Ackermans is still very, very low, and I see a thrust into those businesses that will really, really push top-line growth to the next level over the next few years. The second thing is the fintech business generally performing very well. The push into cellular telephones and all the rest of it also kind of sustaining that business going forward.
They're an absolute monopoly. I know that there's some competitors that people talk about, but I mean, if with the demand for semiconductors just going to blow out over the next couple of years, they're in a super position. And I think competition's a long way away. I know we're always looking for it. There's nothing in China. So I think, they're conservative. They've been held back quite a bit. Because of the issues with Trump and restrictions placed on them. But I think it's a good time to get in now. So let's watch NVIDIA's results. Let's watch what NVIDIA says. But I think one of the beneficiaries of this growth is going to be ASML.
So David picking ASML and Chantal going with a local counter, Pepkor. What are your analysis on those counters, Jordan?
So I think Chantal did a good job of summarizing Pepkor's sort of position currently. If you look at it over a 1-year basis, that share price has done exceptionally well. A company I quite like. I think it's got a strong management team. They sort of stick to their knitting, and they do really well in the environment that they operate in. And I think more from an economic perspective, it's a company that can still deliver results in sort of an environment that we're quite familiar with, being sort of lackluster economic growth. And just a little bit of positive growth, I think, can sort of prove to be further tailwinds behind Pepkor. So one that we quite like. So I agree with Chantal's short summary there. And then David's mention of ASML, I think he ticked all the boxes that I was looking to mention. So quite significantly down. I believe it was about 22% down year to date, or a 1 year basis rather. And he mentioned it already. It could potentially present an attractive entry point into ASML. He rightly summed up that it is a sort of an absolute monopoly in that space, and I agree with him. I think they're years, if not decades, ahead of their competitors. Largely what he's saying is, they're in the business of selling picks and shovels in a gold rush kind of thing, and they do have a monopoly for the time being. But he correctly identified, and something that we look at quite closely, is the political risk around the business. So sort of all these factors pulling in their favor, but it's not an ideal situation where they're being told you will only sell X to these group of people. You cannot sell to these countries, and there is some concerns around that. So political risk is definitely one that's present in ASML, but largely sort of leagues ahead of their competitors or anyone else trying to build these machines to manufacture the semiconductors.
All right, quickly before I let you go, where are you seeing opportunity at the moment?
So a company I really like that I've looked at quite in detail recently is called Axon Enterprises. It's a company that I think sort of firmly sits in the defense space, somewhat different to the likes of like a Boeing or any of these sort of hardware makers. So they play mostly in the sort of police space, largely in the US. And I think what is very interesting is some of the stuff they're building. So yes, they're making some of the hardware that these cops are using in the US. So a lot of policemen use body cameras nowadays. And it's gotten quite sophisticated in that space where the hardware that they're manufacturing is also helping the uptake of their software. So, for example, one of their big selling points is the police force, on average, an average policeman spends about 3 hours a day writing reports, or at least they do in the US. Now, they've developed a system where that body camera is watching the footage and listening to the audio, and they've implemented an AI system in their business that will automatically generate a police report. Obviously, the individual police officer needs to go and look and analyze and just adjust, but it's taking a lot of that time off their hands and effectively increasing the size of the police force. You have less officers sitting in the station writing reports and more officers on the street. So I think that's a key aspect of the business that we really like. There's a number of other hardware aspects that they're looking at, but I mean, to just give you a brief example, they've talked about, and an example they give is, there's a hit and run incident, cyclist is knocked down. Police officer pulls over, the cyclist doesn't speak the same language as that officer. That body cam can live translate what that individual is saying to the officer. They send it back to their control room, they say, it was a red Mustang that knocked this individual down. The systems and the software they have in the background are plugged into all these CCTV footage. That individual in the control room literally goes, we're looking for a Mustang in red in this area, and immediately it will pull up images and they'll go, that's the vehicle, that's the license plate, dispatch available resources in the area. So that's just a few of the things they're doing, but I think we know that the government sector is not the most efficient, whether it's here or in the US, And when I see companies doing this kind of thing, I think there's huge scope for cloud-based systems and smart systems like that, and the use of AI to increase efficiencies in those spaces. So it is quite an expensive stock, and it's sort of a growth stock, if you can call it that. So one that to certainly keep an eye on. It's delivered great results over the last year.
All right, Jordan, thanks so much for your time and taking us through trade this afternoon. That was Jordan Toy from Legacy Family Wealth.